Hi everybody, this is Gary Dino Sentiment Timing, and this is our technical video report for Sunday, August 18th, 2019. I hope you guys are having a fantastic weekend, and let's get started. So I'm going to do a little bit of a recap on some of the reports that we have and what's been taking place. Our predictive analytics model remains bearish, say intermediate term. Short term, it was neutral, and the neutral was because we got the 0% bullish sentiment reading when we had that big drop on Wednesday. So this was kind of our warning sign that not to get too overly bearish on the market and to expect some kind of bounce. And that's kind of what I was putting in the morning notes, was that we, even if we made a lower low from the recent drop, that we were going to get some bullish divergences, and from there we would then expect a larger, kind of bounce from there. But it ended up making a double bottom. We saw a fantastic rally on Friday, which was allowed, and now we start picking and choosing the next areas to look to short. So in the report, the daily timing was for a low near. I have these X'd out. You can go back to the reports and look at them, our premium members, because I'm going to be sending this out to everybody. And the weekly profiles, it's say our interim low is due, and that's again the date that's there. So what we had said was last week it would be great to have some hard pops into the 812s. We had a huge spike on the 13th, excuse me, and that was the actual top on that. So the markets are now open to fall again, which we did see, and now we want to start, just kind of picking and choosing where to get short, where to cover shorts, because when you're in a market that's dropping, or there's volatility, you're going to get massive moves in both directions. And the people that just hold on for the big trade, a lot of times what happens is they end up watching their portfolio go up and down, and for the most part usually back out at the exact wrong time, and then we get follow through to the move that was in place. And right now we're still looking at that move being to the downside into the projected low date that Woody has, that you can go look in the premium report. So what we're also saying were that stabs towards the 2940th should be the end point to the recent bounce, and that's exactly what happened. But again, we had the 0% bullish sentiment reading, so it's not a buy signal. It's more a confirm that there's uncertainty in the market, there's volatility in the market. But don't get overly bearish, because, like I said, we have everybody that was bearish on the markets. We are at support zones, and even if we broke that support, there was going to be bullish divergences. So when you're looking at taking a position on the short time, those aren't the ingredients that you want to be, jumping heavily short. If anything, you want to start covering some shorts and then freeing up some cash and then waiting for a bounce, pretty much like we got on Friday, and then you reshort it. And you always leave a little bit in the position just in case things go viral and support levels break and things continue to the downside or the upside if we were looking up. So let's take a look at the charts and see what that's saying. So the overall bigger pattern is this big reverse symmetrical triangle. So I'm not 100% sure that this is going to play out or not, but you can see every time everybody got overly bearish, we got a new pop to new highs. Every time everybody got overly bullish on the markets, we got a drop to a lower low. Everybody was extremely bearish in this December time period, and from there we had a rally. Now everybody's bullish on the market, and well, say from a longer term piece, but from there, this is what it's calling for: a move to actually take out these December 2018 lows. So again, I'm not 100% sure this is going to play out, but it is a pattern that we want to keep an eye on. So as you can see here, what is taking place is that every time we come down to the 200-day moving average, buyers are stepping in, and so this is obviously what the bears have to break through. They have to close below the 200-day moving average. Now there's support at the 2800, and this is kind of what I was warning about in the morning notes, if we take a look at the 60-minute chart, was that, if we broke through this support here, we were going to most likely get bullish divergences, and there was support at the 2800, and then there was also support at 2761. So if it broke it and went down to 2761, then that would have been good. But what your risk was getting short and then it finding support at the 2800 and then getting this move. But what the market ended up doing was just holding this, so it looks like kind of like a double bottom type thing, and we had a good rally. We closed right at the 50-day moving average on the hourly chart. But if we look at the 15-minute chart, it looks like it's just consolidating. So what that is suggesting, now again, nothing is set in stone, but it is suggesting with this pattern, because we had the big move up and now we're moving sideways, that the next move will be to the upside. Now, if it goes to the downside, what the bulls are going to have to hold is this 2870 level, because if they lose it, now they're back below the 50-day, and from there, we would then anticipate that we could get a gap fill at the 2855. So if this little consolidation pattern looks like it plays out and they pop higher, really what I would be eyeing and looking at would be the open gap up at this 2925 level, and if they get above it, obviously we have resistance at the 2942. But what we have to remember is that we still have this open gap up at the 2950. So these would be targets. I don't know if they're going to come up and close this gap, but if we head higher, this would be the first target. Now, if bears show up and hold the market down in this area, then what I would anticipate is that we're probably coming down to this. My take would be was we're coming down and closing the gap at the 2750 with pretty good odds that we're going to come down to the 2727 and test that. Now, the reason why is, remember, this is the target area where if we come down here and then get a bounce, and then that would set up the right shoulder of an inverted head and shoulders pattern. So again, not sure if this is playing out, just because it's very early in the stage, and we would have to come down and see support hold first. But if that happens, most likely this will come down and make this low right into the where we're looking at the low date, and then get the bounce back up where it will suck everybody in on the upside, only to move back down again. And the downside move would be projected for the interim low that Woody has in the report. So again, right now, what the bears have to do is get it through the 200-day moving average, but really more importantly through the 2805 or 2800 level. If they lose that, then you assume, or that what we would be projecting is that the next low is coming down at the 2731. That will be at the short-term low date, and then from there, that's where you cover shorts, or you leave some on just in case it breaks, because then we get a panic low down to the 2615. But if it bounces, you now freed up cash for this move to start shorting it up here. So we're still in this, kind of waiting period, because we're trading within the 50-day moving average and the 200-day moving average. Now, one of these obviously has to break, which it will. Our preferred pattern would be a break to the downside down to the 2720. Now, we had bearish divergences here. This move here did not give us any bullish divergences. So if we start coming up again, then, I'm assuming that if we come into the, come down to this 2800 or to 2765, that will give us the bullish divergences. So it's we're really waiting to see how this range is, because the range is what I mentioned was 2942 down to the 2820. So now another pattern that's in play is we have a big move down, and it looks like we're consolidating at the lower end. So we could come all the way back up here, and what we're doing is just forming a bear flag, and that would suggest that the next move would be to the downside, and where I believe that we would come down to the 2727 level, and then from there you just stay open-minded for bounces. So right now, if we head higher, I would assume that we're coming up to this 2724, close this gap. This is also the 200-day moving average. So this, on the upside, this would be the target area up here, and if we head down, Really, what the Bears would have to do is push it through to 28.73. If they do that, then we're coming down to the 28.55. If we do head higher, you notice that most likely we're going to get some we're going to get some bearish divergences. So again, you just want to keep an eye on resistance and look to layer in a short. Now you can see when we made this low, this panic low, and this was really on Thursday to follow through before we got the bounce. You can see we had massive bullish divergences. So short term, it would make sense if we had higher, possibly close this gap, and from there, that would give us the bearish divergences and most likely set up the next move to the downside. So let's see what plays out on Monday. It should be interesting. I'm more on the side of shorting rallies right now, and if we head down and really get below this 28.72, this is where I believe that we should have a reaction trade down to the 28.24 and most likely down to the 2800. So this would be, below here, that would be the trade down to the 2800. If we pop above, then the upside target would be someplace up into the 2930, maybe even the 2942. So let's see what plays out on Monday. Have a great weekend, and I will talk to you guys in the morning.